All right, so if we could just display the home screen there. Good morning, everyone. My name is Victor Lund. I'm the CEO of RE Technology. We're going to be talking about the top 5 reasons why real estate brokers are choosing digital transaction management. Joining me today is a real estate broker in 4 states. His name is Aaron Wheeler. Aaron, welcome. Are you with us?
Good morning, Victor. Good morning from San Francisco. Thank you.
Excellent. Yeah, I never know where you're at, but glad to hear that you're on the West Coast. So listen, just to kind of get started, Wave Group and RE Technology have always challenged that digital transaction management is really an environmental thing, like where you're located, where your businesses operate, how forms are managed in those regions, and things like that. Has a pretty, and the size of the company, the number of offices you have, whether you use transaction managers or whether agents do it, how closings are handled, title company versus legal or versus lawyers and things like that. So can you just kind of give us an overview a little bit about your company, the size of the firm, number of transactions you do, where you operate, things like that?
Sure, Victor. We're a boutique firm out here in the San Francisco Bay Area. We are licensed in 4 states. New York happens to be one of those, in addition to Florida. We were very early adopters of Docusign and Docusign transaction rooms because we recognize that, transaction management is like a form of insurance, and most people don't think about transaction management like they don't think about insurance until something goes wrong. That day when one of your agents is accused of failing to materially disclose something relevant in a transaction, and you find yourself with a lawsuit. And then that's the day that transaction management becomes especially important, and you need to know where those documents are, and very quickly to show that you were in the right. And when you need that level of insurance, you want good insurance, and Docusign and DTR is some of the strongest that you can have.
That's excellent. I spent a little time recently going through one of the Wave Group white papers that we wrote in 2009, and it's sometimes very interesting to go back a little bit, before, in order to go forward. And the topic of today's webinar is why today's brokers are using digital transaction management. But I was interested in going back to the 2009 study to see the reasons why brokers were adopting it. And it's amazing to me how much the needs that the solution fills in today's brokerage have changed. So with one of the big hot buttons in 2009 was going through. So we were studying things like, for every 12 transactions, there's one tree, and, it costs brokerages, most brokerages, a few $100s a month plus a few $100s in storage each month to just manage the paper load that we have in real estate technology. And at the time, digital signatures really weren't in existence, and I think we were, the whole banking industry was reliant mostly on wet signatures for pretty much everything. So that we thought that 2009 would be kind of a breakthrough year for digital transaction management, mostly because people were familiar with a good old technology called e-fax. So you could actually get documents into a transaction environment where it could be managed and things. A lot of people really found that transaction management had a very distinct advantage in their business because of the communication that it not only between the agent and the client, but also all the parties that were party to the transaction. And we also found that consumers were just belabored by the volume of paper. It was a very intimidating thing. Well, largely speaking, all of that's not the way. I mean, if we look at the top reasons why people are using, if you could advance the slide a little bit, 2 more, to slide 5, there we go. So a lot of the reasons why real estate brokers are looking at transaction management today has to do with things like, visibility in the transaction. So you have a lot of deals going on at the same time. You need to be able to peek into those deals at any given time to really understand what's going on. Compliance, so trying to understand what issues brokers have to be concerned with to make sure the deals go through. Next slide, please. the control that a brokerage has over the transaction and the agent has over the transaction, especially as you go through the iteration of it. One thing that really didn't exist in 2009, which is vital to businesses today, is mobile. So we've seen that digital transaction management has gone through a pretty considerable evolution as it supports devices that are out in the field. And then the last thing, which a lot of people tend to neglect, is security. So can you talk a little bit about how digital transaction management plays into your business across those 5 points, Aaron?
Absolutely, absolutely, Victor. You know, we use digital transaction management from the time the listing is signed all the way through completion, and on the buyer's side from the time the client is in escrow, again through completion. It's a significant time saver to myself and my team, and it's also especially valuable as a training tool as well. We in California are very fortunate that we have a very robust integration with the ZipForms platform, which all of our agents use. But we're coming out with new forms and new documents on a regular basis so that we need to educate our team how to get up to speed on. So by leveraging DTR, we're able to quickly see where our agents may have challenges associated with those forms and use it as a training tool to correct that right away to ensure that we're in compliance and we're protecting our clients' interests at the same time.
So how do you explain the differences between digital transaction management, forms management, and digital signatures? Because I think a lot of people get a little confused to where the lines are drawn between those.
I think that's a great question. So let's start with digital signatures. The digital signature is basically the process for making money, basically, and we all like to make money. We have to have contracts that are legally binding to be able to bring our transactions from start to completion. And that is the tool that enables that to happen. So Docusign was truly a pioneer in terms of being able to create a technology that was accepted and recognized not only by the transaction participants but the lenders as well. So that's been absolutely key. Forms management is really relegated to the associations and their forms teams for putting together the latest set of contracts, legal language, etc., that our agents need to do certain transactions on a day-to-day basis. This varies in locations like New York City, for example, where there really are no forms. Once the terms of a transaction are agreed to, then it's simply turned over to the attorneys involved and the managing agents in for a condo transaction or a co-op. And then lastly, transaction management is making sure that we have everything that we need to successfully close the transaction and also ensure that everything is in compliance at the same time.
Yeah, and I think that's probably one of the big breakthrough differences. It's like 5 years ago, transaction management was really just a storage facility combined with a glorified checklist. And you'd be able to kind of see the progress you were making through a transaction. But today it's really a business tool that allows you to do the processing, right? You're not just, the documents are living documents within the system, and they're kept securely, and you can access them from any device, things like that. So it really has evolved. The whole product line has really changed pretty considerably. One of the unique things that I've learned from you, Aaron, is that you find yourself in environments where you have a variety of different form solutions and different transaction management solutions, some of which may be offered by the MLS or the association, and some of which you just have internally. So do you tend to use the same transaction management system against all markets, whether or not, or do you tend to use the system that's in that market?
Absolutely. I have standardized upon Docusign transaction rooms for all of our markets that we work in. And granted, to your point, different markets do utilize different form systems. Some markets will utilize zip forms. Some will use Instinet. Others will be attorney-based, documents that are put together. Regardless of the form platform, whether it exists or not, we're still using DTR and Docusign as our tool for getting those documents signed and be able to securely store them and manage the process.
So when we look at the recent NAR statistics, they say that only 80% of agents are still are using electronic forms, which I thought was what felt to me like a low number. In terms of 1 in 5 transactions still being a paper transaction that's initiated by the agent. They didn't really talk much about the percentage of agents that have used digital signature, but I would probably presume that it's half the people that are using the electronic documents. And then in terms of digital transaction management, the adoption is even lower. But in your business, you've been able to implement the solution across 100% of your agents and 100% of your transactions. Are there any tips or tricks or things like that that you might share with our audience today on how you accomplish that?
Absolutely. One of the most effective ways is that in order for an agent to be paid at closing, then everything has to be properly documented in the system. And that is certainly a very powerful and effective tool to ensure that everything is documented. But you talk about agents utilizing transactions on paper. Our forms are very, very dynamic. Our legal language in California, we're a highly litigious state. It changes all the time. One cannot afford to be using a paper document from months ago. It's too old. You have to stay on top of the latest digital forms to make sure that you're in compliance and you're protecting your client's interests.
Yeah, there's certainly nothing worse than a company having to send an agent back to get a signature on a new document because they used the wrong one. So do you find that a lot of the agents are using offline systems and then just putting it into the transaction management for closing, or has your policy actually driven deeper adoption throughout the transaction process?
I think the policy actually drives deeper transaction adoption, and I think it's a lot easier to keep it up to date throughout the process, especially with the forms integration and the Docusign integration. It certainly makes life a lot easier for the team as a result of that.
And in pretty much all your markets except New York, your electronic forms are being automatically populated by MLS data feeds, right? So it's eliminating duplicate entry and input error on a lot of the property descriptions and other standard fields of the forms.
That is correct, and probably the most valuable feature of the integration, especially in California, is that it automatically populates everywhere that the client would need the sign date and initial. So it takes a lot of risk out of missing a spot on the document which could invalidate the entire contract.
Yeah, you miss one signature here, it's not done. Well, let's kind of, I think it'd be really helpful to break down these 5 areas of digital transaction management so that people really understand what we mean by visibility, compliance, control, mobile, and security. When we're doing RFPs for enterprise-level brokerages today, these are the 5 items that we believe should be foremost in the consideration of the solution. You notice I didn't put any information here necessarily about usability or some of these other things. It's not that those aren't also important, but integration with your systems is also important, but these 5 items seem to be the most key category killers that solve problems for brokers today. So if we could just look at the visibility form, I'd like to ask Aaron or the visibility page, next slide. I'd like to just ask Aaron a little bit about 3 areas of visibility, mostly reporting, what you need to look at when you get into transactions in the middle of the transaction, and then how it's impacting your business in terms of forecasting. So can you just begin by telling me a little bit about the reporting visibility and how you use that today?
Absolutely. I think one of the key parts of visibility within a transaction management platform is to serve as a dashboard to kind of see where all of your transactions are going at any given time. It's also important to be able to have insight as to where transactions are with regard to certain contractual deadlines that need to be achieved so that they're not missed, so that if we have to step up and make sure that things need to be done in a certain area, then they can be taken care of and addressed quickly.
So do you sort of permission views, so the agent has a view of their open transaction, the office manager has the view of their transactions in their office, and then you have the views of all of the transactions in all of the offices? Is that sort of the way that you have the permission set?
That's correct. We're able to break up the permissions, and that's going into security a little bit, segmenting different geographies or offices and assigning manager-level permissions to different offices so that it controls what everyone can see along the lines of what you described.
So do you use the dashboard to sort of, as you follow up with your office managers on whatever interval, weekly or what have you, do you use the dashboard as a way of just getting up to speed on all their deals?
Absolutely.
And do they then hold the agents accountable as well? So they're also in the dashboard every day?
But of course.
Yeah, good. And do you guys do, like, I don't know at what stage a company begins to do sort of weekly deal forecasting, but do you do it on a weekly basis or a monthly basis? How do you forecast? How do you use the transaction management solution in your forecasting?
I tend to look at it on a monthly basis because you look at transactions typically taking a 30-day time frame on average here or less. So that's a pretty useful benchmark for forecasting when things are coming in from a revenue perspective.
From the time you have an accepted offer, what are you seeing as sort of the natural time that it takes to do a closing? And does that vary significantly from state to state?
I think that's more of a geographic phenomena there. For the most part, we see our transactions take place in 30 days on average. We've had cash transactions close in 5 days. So it can vary completely.
Gotcha. And before you used transaction rooms, what process did you have in your business for understanding where you were in these deals? Because now you have a dashboard to tell you to see it all.
Well, we had a variety of different processes, from simply storing the information on our computer hard drives. We had leveraged the Relay platform. At one point, there were manual spreadsheets. So the technology has certainly evolved, and we're always keeping our eye open to tools such as DTR, which will provide us with more efficiencies in our business.
So do you have any sense for when you're going to actually be 100% paperless? Where, I mean, I imagine that you're like 2 years into being paperless, so you have about 5 years of storage that you have to still maintain until you get through that. Is that sort of where you're at now?
I'm sitting and taking a look around the office right now, and the only paper are the publications on my desk.
Homes and Land magazine. Well, let's move on and just talk a little bit about compliance. You mentioned earlier that California, well, just about any other state, is becoming more and more litigious as it relates to the transaction. And can you talk a little bit about, like, how do you define compliance in your business?
Well, compliance is, you're making sure that we adhere to, all of the requirements that are required by the state, but also our, state regulatory board as well. We could be called up at, any point and decide that they want to come in and audit all of our files, and we need to be able to readily make those files available to the regulator at a moment's notice. So imagine having to scramble through file cabinets worth of files going back years, or simply making available a broker level login to a effective transaction management platform and having everything right there on the spot. To the ability that you can quickly present information to the regulators when they require it, makes your audit process go a lot faster.
And when they audit in a state like California, how many years back do they go? As many as they want, or?
They can do whatever they like.
Yeah. I was just curious as to, I've always recognized that some brokerages spend a lot of time deliberating about whether they should go fax in all of their old deals so that every deal that they've had that they're required to store is available electronically. Have you guys gone through that process or thought about that?
We had some what we'll refer to as legacy transactions from the paper days gone by, and since that point, it's very inexpensive to go run those through a scanner, image those, and upload those into the system. So we have a permanent archive.
And when they come into the system, do you use the? I know that one of the hottest features right now of digital transaction management is the ability to take a document and break it apart into its, so a lot of times when somebody faxes a deal in to a transaction management system, it's 15 different contracts in one fax. You have to break those up into its parts. Is that something that you've found to be a significant differentiator for your company?
That's definitely a key advantage of the system, because it's possible then to scan the entire legacy file all at once and then use the powers of the transaction management platform to separate it into logical, discrete documents that are easily identifiable. Gotcha.
Let's just talk a little bit about the checklist that you use, and is this something that you've been curating over time, or are there any changes that are happening in your checklist as a result of being an all-digital company?
I think that our checklist fundamentally remains the same. The checklist can vary depending upon the market. Here in San Francisco, for example, we have some very unique and different documents that we utilize here that are not in use throughout the rest of the Bay Area. So it affords you the flexibility to customize the checklist based upon your needs. And it's much easier to tell at a glance where you are in terms of meeting all of the required documents on that checklist. And that helps expedite the file review process at the very end.
So I guess maybe a highlight of the system you chose was that you take the checklist that you operate in your business and just program the system to work the way you work. You're not having to change your internal systems to accommodate the workflow in the transaction management system. Is that correct?
Absolutely. The transaction management system does not force you into a particular workflow. You can define your workflow and use the transaction management system as a tool to make sure that you're achieving all the items that you need to.
And has going to digital transaction management made your approval process any different? I mean, do you wait until the entire document is done before you approve it, or do you piecemeal review the documents as they're being populated through the lifetime of the transaction?
Usually it's easier to review all of the documents at the very end, but I alluded to earlier that we're always coming out with new forms and new legal language, and oftentimes it's very helpful to review the transactions in the middle to see how everyone is doing with regard to using those new documents, and then use that as a training tool to identify where things may not be going correctly and be able to proactively remedy those issues.
You mentioned training. Do you think it's burdensome to insist to an agent who's coming to your firm that they're going to be paperless? Is that a problem for your recruiting, or an advantage, or is it mute? In some agents,
no. What's burdensome, Victor, is if someone, what's burdensome is, to find yourself in a situation where all of a sudden you need to go to court over something, and then you can't find, what you need to prove that you were really in compliance at the end of the day. So the couple of minutes that it takes to put the transaction online are small compared to the legal headaches that can result for, not having a well-documented file.
Yeah, I mean, with digital transaction management, you have a pretty significant activity and audit trail log of what happened with every document and when it happened and how the communications went and all that stuff, right? That's really a pretty significant compliance advantage over companies that are not using transaction management. I want to kind of talk about, we mentioned one of the key features of digital transaction management being control. So if we can just look at the next slide, maybe we can talk about how you define control in your business. I think it's sort of a catch-all term, but as it refers to transactions, what levels of control are you getting now that you didn't have when you were just doing electronic forms and signatures?
Well, I think one of the powerful features of the transaction management platform is exactly like it describes in the chart, that you can create your own custom-defined hierarchy of regions and offices and then control who is able to manage those transactions within those particular areas. So that's particularly effective. Back in the old days, there were file servers, and you would have to have IT resources go in and set up permissions as to who could access what directories or what directories cannot be accessed. Now the capability is brought back to the end users, to the managers, to the brokers, that they can dynamically define that on the fly. And then the agents have the capability within their individual transactions. They can decide which transaction participants can be allowed into the transaction, whether it be buyer, seller, lender, title company, whoever the case may be.
So one of the challenges to inviting people into the transaction, there's more than one, but one challenge is managing profiles, and I know that I think Transaction Room has done quite a bit to create sort of a contact database within their solution, right?
Has, yes.
So if you use, I guess over time what happens is all the title reps that you use and all the mortgage banking, you're a mortgage company yourself, right?
We are a mortgage company as well, so we have relationships with our different lenders, and we have a contact database of those people built into the system as well.
Do you find that it's easy or difficult to get people into the system? I mean, when you're sort of forcing it upon everybody, is that what kind of challenges does that pose for your business, and what are some of the tips that you use to get over those challenges?
I think it's very easy, because when you add someone into the system for the first time, or you give them an invite into a particular transaction, they receive a nice email alert that lets them know that they have been invited, and then it's very easy for them to log in and access the documents. I can even do that from my phone or my iPad while I'm traveling. So it's a very easy to manage system.
So how do you manage transactions when you're representing either the buyer side or the seller side, and you have another firm representing the other side, and you guys are using different transaction management systems? What's your policy there for how you're managing the documents?
Well, we still get all the documents for the transaction, regardless of what sides are involved. Everything ultimately comes together into one set of transaction documents that everyone will be able to access. So we simply compile the documents as we go and then load them into the system. If we're representing a buyer, for example, we will, let's do it the other way around. If we're representing a seller on the listing, we will, give the buyer's agent access to the purchase contract and buying related documents, but we can go into the system and not give them access to, say, the listing agreement, for example, that is confidential between us and the seller.
So do you you duplicate the transactions even when somebody's running it in their own transaction system? You just parallel path the transactions in both systems?
Absolutely, because we have to have our own record at the end of the day. So we have to, we're a participant in the transaction, and if anyone were to come in and audit us, we well assured need to have our own copy.
Yeah. Do you think there's ever going to be a day in our future when transaction management systems will talk to each other?
There certainly will be.
That'd be a great day. But you mentioned that you spend a lot of time in traveling around, and you're using your mobile solution. If we could go to the next slide and just kind of talk a little bit about how mobile has changed and why that's been so important in the adoption of transaction management for your company.
I travel a lot. My agents are on the move all the time, so mobile is absolutely absolutely essential. You need to have a quickly way to access your documents anytime, anywhere. I remember a great example where I was traveling back into San Francisco, and the bank needed a document immediately, or they were not going to fund the loan so that the buyer could close the following day. Fortunately, I was able to, from my phone, with my laptop nowhere in sight, quickly pull up that document and email it off to the lender in less than 5 minutes so that the buyer was able to close. And I think that's essential to have that type of, it's all about service, really, at the end of the day. And, you want to have anytime, anywhere access to your documents, because you never know when you may need them to close a transaction. And that's a great example of that.
Yeah, I've had some interesting experiences, specifically with Docusign, because one of the mobile features that I really like about the product is that you can press and hold your finger on a document that's on your phone or on your iPad, and then click the Open In button, and then open that document right in Docusign off your phone. And to all intents and purposes, you can do anything that you need to manipulate that document there, to sign that document there. And to me, I've often remarked that that's actually easier than if you got the document in Outlook or on your computer, because you'd have to save the file, go to a browser, upload the file into Docusign, and then manage your document that way. They've actually made it easier on mobile than it is on a desktop, which I think has gone a long ways toward improving the adoption of mobile technology solutions, especially as it relates to digital signatures. Can you even imagine what it would be like not to have physical transaction management today? You've been doing it for so long this way. I wonder, could you go back?
We've been doing it for so long that I think we're past the point of no return.
Gotcha. So do you integrate? I mean, you have forms integration into Docusign, right? But are there other applications that you guys use? Like I noticed, some of these integrate with Dropbox and Box and other storage facilities. Are you using any of those, or do you find everything that you need is accessible from within the platform today?
I find that everything that I need is really accessible within the platform.
Yeah. Well, let's talk a little bit about security. And as we go to the next slide, I just want to remind you we've got some great questions that have come in already. But by all means, please type your questions in the GoToWebinar control panel, and we'll enter into the Q&A session in just a few minutes. But as it relates to security, and I've read all of the state statutes as it relates to protecting consumer information, and certainly we have a lot of private and confidential information that real estate agents collect, and the days of keeping that information secure have really changed quite a bit. I mean, the notion of leaving a file out on your desk, or God forbid, in the backseat of your car, has largely been overcome in real estate. But can you just talk a little bit about what security means in your business and how you kind of audit yourself relative to your meeting security standards?
Absolutely. Security for us is really the difference between being in business or not being in business from a regulatory perspective. We have access to a wealth of information, social security numbers, financial records, you name it. We cannot afford for this information to get into the wrong hands. There would be the liability associated with that would be huge. So therefore, it's critical that we rely upon a platform that will effectively secure all that data, and there are appropriate permissions in place to be able to determine who can get it, who accesses it, when they access it, and where it gets distributed to. And that's what we love about DTR. It makes all that happen.
So there are a few things that people need to talk to their vendor about when they're considering security. Can you explain what redundant data centers is and why that's important to brokers today?
Absolutely, I can. So the meaning of a redundant data center is that if I'm here in California and my data center is in California as well, and all of a sudden, heaven forbid, we have the next great earthquake, with a redundant data center, say back in New York or Boston, for example, I can still access my data because even though we may be out here on the West Coast, I can still get to it on the East Coast.
And in terms of within the system itself and who can access the content, are there any questions that you can think of relative to how you can assure privacy settings from your vendor? Are there questions you ask about that?
Absolutely. Absolutely. I simply look at within Docusign Transaction Room, and one of the most powerful features is that on a file-by-file basis, you can define the security associated with that file. So on a copy of the listing agreement, I could decide to make that available to my sellers, the escrow officer for the transaction, but not make it available to the buyer. I can individually control that for each and every file in the system.
Gotcha. And I think the standard that is used in the banking industry for understanding security, especially on servers, is ISO 27001. And I think one of the really cool things about that is it's an international standard for document storage and security. It's pretty interesting to understand just how advanced security has become as it relates to signatures for a lot of the reasons that you just discussed. But I know that there was a lot of discussion, a few years ago about evidence tampering with documents and things like that. Do you think that that is an issue that we're largely beyond right now in transaction management?
I think that we're within the transaction management space, particularly within the electronic signature space. I think if you're utilizing those technologies, then we're beyond that to a certain extent. Because one of the great features of Docusign from an electronic signature perspective is the transaction stamp or audit trail that you can affix on the top of every page. And that provides you with a high level of assurance that the document has not been altered or tampered with. It creates sort of a watermark, so to speak.
Great. So if we can just go to the next slide, we're going to enter into our Q&A session and just answer some of the questions that came in from our audience today. Here's a question. It's, my MLS provides 2 e-signature solutions. It looks like they're from California. And it doesn't look like they know the names of either of them. But I think you have Docusign and you have one other solution that's available within Zip Forms in California. Can you describe the differences between them?
Sure. In California, we also have another system that's called Digital Ink as well, and there's also a integration for that. One of the disadvantages of using the Digital Ink platform is that you don't have that nice, easy integration with Docusign Transaction Rooms. You'd have to take the document then out of Digital Ink and manually save it and upload it back into whatever transaction platform that you're using, whether it be Docusign Transaction Room or otherwise. So I favor, from a simplicity perspective, a completely integrated solution, and it minimizes the amount of work that we have to do.
Excellent. So let's advance the slide a few more. I want to do just a quick poll before we continue on here. So if I could ask the staff to launch the poll right now. What we're trying to understand is if there's any more information that you'd like about transaction management, whether you want a demo of the solution, a lot of times we have the vendor on that that the broker's using in order to kind of show what they're using. We decided not to do that this time, but if somebody would like some information about Docusign, they can certainly get that. So just answer this question and we'll pass it along to them. And then the last thing that I'd like to do, if we can go ahead and see how we're doing. How are we doing with the poll? So a new question just came in. Is there a calendar function within the transaction management solution you're using?
We like to think of the calendar function as being basically within the terms of the checklist capability to identify whether we're hitting the key dates within the transaction.
Is that a pretty popular feature? It doesn't really integrate with your, do you use Outlook Calendar or G Calendar, or what do you use?
No, what we do within our checklist capability is we're able to identify what the key transaction dates are. For example, let's say that a buyer has a contingency for financing, for example, at 14 days after acceptance. We're able to plug that into the system and then monitor how close we're getting to that date.
Gotcha. Okay, perfect. Well, just as we conclude our webinar here today, we're going to stop the recording.